The crypto crash continues, and we're not surprised by that because interest rates are spiking. Obviously, it's impossible to know the exact bottom, but let's dive into where we are in this cycle. We have the Federal Reserve doing this to interest rates. You can just see them spiking, right? This is the chart of interest rates absolutely spiking. The Fed is telling us not to spend, and we're listening. How are we listening? Because this is the velocity of money. This is a measure of how quickly people are spending money. Well, right now it has plummeted to an all-time almost low. This goes back to 1960. It has never been this low in our history. And so interest rates spiking has caused people to get poor, for all their assets to collapse. The Federal Reserve is artificially manipulating the economy down, just like they artificially manipulated the economy up during the pandemic. So this is boom-bust cycles, all centrally planned. Obviously, that should excite crypto investors because Web3 is not going anywhere. There's nothing wrong with Web3. It's revolutionary. It's changing the world. And obviously, we know how the smart money is positioning. We've talked a lot about that. So the only way to take advantage of these boom-bust cycles is to know that it's manipulation and to know that eventually the cycle bottoms out. No one knows exactly where that is. But what we do know is that there is a floor. There is a max pain threshold. Once inflation is killed, the Federal Reserve will step in and save the economy, because look at where we are right now. This happens all the time. This is Google searches for inflation versus recession. So obviously when Google searches hit inflation levels, the Federal Reserve steps in and tries to kill it, but then recession takes over, right? You don't want people to start searching recession, but right now recession is about to outpace inflation. So the Federal Reserve is succeeding at making people feel extremely poor. It's not a good time to be doing this, and baby boomers are starting to retire. It's really not a good time to be doing this if you want to be reelected. But what we do know is that is why crypto is crashing. And so people are selling indiscriminately, not even thinking about price, not even thinking that maybe we'll all recover from this. And when we do recover from this stuff that is being sold dirt cheap will recover. It's going to recover faster than anything else, and there may be life-changing returns. That's what I love about this trade. It's like, if technology survives, if humanity survives, and the United States survives, then this stuff, which is a global asset, will provide life-changing returns potentially, right? It's going to do extremely well. All we need is a bottoming of this cycle. Now let's talk about Bitcoin mining, because I know you guys are going to get a lot of FUD about, well, if Bitcoin goes below the cost to produce it, it's not going to survive. So let's dive into the mechanics of that. Right now, we have Bitcoin in the dark green. We have it hitting the lower bound of the cost of its production, meaning right now it's like at 20-ish K. The cost to produce Bitcoin is around that on average. And so the last time this happened was in the pandemic low. It briefly scraped below that. Obviously, that was the most incredible buying opportunity, and we're there right now. And so how does that work? How could Bitcoin survive if the price of it goes below the cost of production? Well, this is what happens. Bottoms normally coincide with miners capitulating. Weak miners are bankrupted, adding to sell pressure in a cascade. Looks like we're deleveraging right now, similar to COVID event. Okay, now again, how does that make sense? Well, this is exactly what happens. Bitcoin price drops, miners switch off their ASICs, due to inefficiency, they stop mining. Hash rate drops, difficulty drops. And then what happens is the Bitcoin reward for efficiency increases. So the people that are still around make more money. Efficient miners buy cheap ASICs, hash rate increase, difficulty increase, BTC price increases. So it is a self-fulfilling cycle. It's all designed to work this way and to be stabilized this way. So there's no concern if the cost of Bitcoin goes below the production cost. Let's dive into the underlying fundamentals. 14 members of Congress sent a letter to the EPA about the benefits of Bitcoin and proof of work mining. 14 members of Congress are supporting Bitcoin. We talked about that lobbying spend. They're putting it to work. They're talking about how it's actually good for the environment, and that should make an impact. Let's dive into some news about revolutionary uses of crypto, because it cannot be ignored, guys. It's knowing that this is all macroeconomic driven and knowing that this technology is revolutionary, it is absolutely potentially a generational setup to be buying this stuff cheap. Obviously not financial advice. This is an ad that Mastercard placed in Decentraland. A Mastercard portal that drives traffic to the Mastercard Pride Plaza in Decentraland. So just one way that the most popular metaverses are going to capitalize on their ecosystems. Big advertisers are going to start spending money in Decentraland and other metaverses that we've talked about. Here's an update from Shiba Inu. They just hit 3.4 million followers, talking about making huge partnerships. Obviously, everyone's going to want to be a part of that ecosystem. The Shiba Inu ecosystem will be more and more valuable the bigger it gets and the more partnerships it gets. Here's one last update. One of the most emblematic French brands is launching its NFTs on Binance, the French post office. Talk about globalization, guys. There is so much going on in this space.